Hi everyone, let's cover my Elliott Wave analysis on Bitcoin on a 4-hour time frame and a 1-hour time frame. And at the end of this video, I will summarize everything, talk about the probabilities and highlight some things that are important. Now the sound quality and the webcam quality might not be great as I'm traveling, so I use my laptop webcam and a wireless microphone. Hopefully it's still good enough for you to watch this video, and I will be back on the 23rd of June with my regular setup. Now, as per the previous update, we were looking for price to move up after touching the 0.618, and we got that move to the upside, eventually a three-wave move. And as per the live stream done recently, preferably looking for a move to the downside, either for a wave X or in a bearish scenario, of course, a continuation. But wave X is with regards to the scenario I have here on my chart, which is a flat. So we have a wave A, wave B, wave C, and then look for price to move towards the upside. Now wave A in this scenario is then a finished zigzag family structure, either a WXY or WXYXZ. However, a triple zigzag WXYXZ is incredibly rare, generally not something I like to put on my chart unless all of the other scenarios are invalidated. So I would prefer a WXY in that case, right? That is a lot more common. But your wave Y is very short in time compared to your wave W. Didn't even reach the 0.382 fib time. So the ratio is a bit off, but it's not an invalidation. Also, wave Y reached the 0.618 Fibonacci, or trend-based fib extension, I should say, which is a target for a wave Y, but it is an uncommon target. So we have to at least keep it in account. There's no invalidations for a WXY, but it is, of course, short in time and price. Now, after your wave A, you're looking for price to move towards the upside in your wave B. Minimum target for B is the 0.9 Fibonacci at 110.8k, which was not touched with this first move towards the upside. So we need price to go higher, which we can achieve with a double zigzag, A, B, C, and W, any corrective structure in X, but commonly a zigzag family structure, and a zigzag in wave Y. Common target for your wave X is the blue box here, 382.618, 106.7k, 104.3k. And again, preferably a zigzag structure, or because price just took out the low here, I'd be interested in a W, X, and a Y. But by all means, wave X has to be a three-wave corrective structure, not a five-wave structure. Now you don't want wave X to move to the 0.7 at 103.4k, as that will significantly decrease the probabilities for a double zigzag to the upside in a wave B, which means the probabilities for this whole scenario decrease. Now commonly wave B would take out the origin of A, which is the all-time high at 112k, and an area to always keep in mind is the 1.236 to the 1.38, 114.7k to 116.4k. If price would move to the upside and touch the 1.618 at 119.1k, probabilities for this scenario decrease. After wave B, we look for C to the downside. Has to be a motive wave, so either an impulse, 1, 2, 3, 4, 5, or a diagonal, 1, 2, 3, 4, 5, and then reverse and look for price to move towards the upside. So that is your bullish scenario. And of course, an Elliott Wave analyst also needs a bearish scenario. Now the short-term movement here was similar, right? Looking for an X or looking for a move to the downside in wave 1. But in this case, you're looking for a five-wave move to the downside, or a multi-1-2, right? 1, 2, 1, 2, and then wave 3, 4, 5, 4, 5. Or you're looking for a 1, 2, 3, 4, 5 correction, and then you look for another leg to the downside. Now, by all means, this move down now has to be counted as a motive wave instead of a zigzag family structure. So now it has to be a five-wave move. Now it can't be an impulse, because 1, 2, 3, 4, 5 overlap between 1 and 4, that's an invalidation, right? That's a hard invalidation if wave 4 ends in overlap with your wave 1. The only gray area that exists between a wave 1 and 4 overlapping is that the price section of a wave 4 can overlap with wave 1 as long as wave 4 does not end in overlap with wave 1, right? And basically what that would look like is you have a wave 1, 2, 3, and then for example we have a triangle, right? And then you get your move down. Wave A of the triangle would then for example overlap with your wave 1 here, right? But your wave E, which is the end of your wave 4, does not overlap with your wave 1, okay? Now this is very rare, right? That's just the case. That would be incredibly rare. But in this case, there is no high probability low time frame Elliott Wave scenario to finish this wave 4 over here, right? Which would be necessary to count this as an impulse. As on most of the chart, there is overlap. Not on all charts, but on most of the charts, there is overlap between these pivots, right? Which would invalidate an impulse. Now then we get to a diagonal, right? So we have a diagonal 1, 2, 3, 4, 5. In that case, this one has to move there because wave 2 and wave 4 in a diagonal have to be zigzag family structures. Wave 5 in a contracting diagonal should be shorter than your wave 3, which is the case, right? A contracting diagonal is also the most common diagonal, so you want 5 to be shorter than 3. You want wave 4 to be shorter than 2, which is also the case, right? The only thing is that, very interestingly, your trend lines are expanding. Now you might not see it when I just put the trend lines on the chart, but let me clear it up for you. If I take a channel from the end of 1 to the end of 3 to the end of 2, then you can see that wave 4 moved beyond this trend line, which of course is not ideal, right? Because now it's a contracting diagonal that we're looking at here, but the trend lines are expanding, right? What the fuck? No? So definitely far from ideal. And then again, right, motive wave here, diagonal impulse, is Elliott waves. It's on crypto, things happen, sometimes a wiki here or there, and you know, of course, with regards to probability, sometimes the chart is just a big mess and you know, things happen that can't always be explained. But let's just say that a motive wave to the downside is not nice. The only thing that makes it quote-unquote okay and nice would be the ratio. So in the bullish scenario, counting a WXY here, Y is short in time and price, right? Counting a WXY XZ is always very rare. If we go to a motive wave, well then at least if we would count a 5 here, of course preferably in a diagonal though, in that case, as then we can count a 3-wave structure at the end here without moving this wave 4 here for a whatever the hell this is, right, in a wave 4. So preferably a diagonal, at least the ratio is then decent compared to your 1, your 3 and your 5 in time and in price. That is then the thing that discount benefits over the bullish scenario, right? But I think the most interesting and most important thing is what happens here, right? That is at the moment what we have to look for, okay? So in this scenario, we need a 5-waver down or a multi-1-2, and I'll get to that in a second when I zoom into the 1-hour time frame, okay? Now then we get to your most bullish scenario, low probabilities, just want to show it nonetheless. So 1, 2, 1, 2, this wave 1 here either has to be some sort of a diagonal, but if this is your only little peak, like little bit wave 2, right, tiny wave 2, this doesn't make sense anymore. This 2 is way too big compared to this. So you need to finish this wave 1 either here or either there, and then have a longer 2. It's still a low probability scenario. It's not really something I'm looking for, but I have it in my folders because I just wanted to say it, I suppose. And if you end wave 2, right, at that particular low, the common target for your next wave 2 is the 786.05. We're currently at the 786. If you touch the 886 at 105.9K, you know, the scenario, I mean, will be removed, but it's in general not a high probability scenario. Then we jump to the 1 hour. And as explained in a bullish scenario, we preferably, right, in the flat, right, we look for wave X, has to be a 3-wave structure, preferably a zigzag family structure. And a zigzag family structure would be a WX and then a wave Y. Now in that case, we would then have a wave A, B, and a wave C. Wave A is then an expanding diagonal, by the way. Then we have wave B, double zigzag, WX, and then a wave Y. Right, where wave Y took out the high of W, and then we look for price to move towards the downside. In wave W, we then have a wave 1, 2, 3, 4, 5-wave structure. Right, that's then the end of your wave W. Now, after W, we then look for a wave X and another wave Y to the downside to create a 3-wave move to the downside. Right, so preferably a little bit more range in X and then a move to the downside in a wave Y. Can't really get a solid ABC in here anymore, where this low is still part of a wave C, as then you need A, B. And then, yeah, I mean, 1, 2, 1, 2, 3, 4, 5, 4, 5. But the high of this 4 overlaps with the low over here of a potential 1. So that is why preferably I end wave W here, look for X and then wave Y. Maybe X is already in, who knows, but it would be very short, of course, compared to W. So preferably X is a bit longer, and then you drop for your wave Y, right? And move into some areas of support. Now in a bearish scenario, right, you're also looking for a drop, but then continuation. So this is your bearish multi 1-2, which fits with the impulse to the downside. So you're looking for price to take 100K, right? And the bearish scenario, look for a wave 1, right? 1, 2, 3, 4, 5, or multi 1-2. The issue for a normal 5 waver though on the lower time frame now is that we have overlap here between that high and this low. It's almost the story of this video, overlaps between 1s and 4s. So if you want to count this as a 1, 2, 3, 4, 5, 4 and 1 overlap right over here, doesn't work unless you start talking about diagonals again, right? 1, 2, 3, 4, 5 in a diagonal, but at the moment this does not look like a diagonal, so it's not really something that I would like to count. Instead, it would be better to count a multi 1-2. And also from a probability perspective, a multi 1-2 is more common than a diagonal. So you preferably count multi 1-2s first before moving into the diagonals. So here we then have a 1, 2, another 1, look for another 2, and then a 3 towards the downside. Common target for 2, 05786, 108.5, 109.6. Minimum target 382, right? Generally the minimum 108, which is touched. And after 2, you look for wave 3. Now wave 2 could be finished here, and you start a wave 3 to the downside, possibly wave 2 range is a bit longer, right? Doesn't matter, you look for price to still move towards the downside. And preferably in this scenario, you look for volume to increase, right? So you want to see price extend to the downside and volume to increase as price is moving towards the downside. So the big difference between bull and bear scenario is what happens here. In a bearish scenario, you look for price to move down on a high amount of volume, right? You want an extension on a high amount of volume. Sure, this can still become a flat in an ABC, right? Something to keep in mind. And if you, let's see, if you move beyond the 1.618 here at 105.4K, that is when a flat is low probabilities, right? So that is the moment when in a bearish scenario, you're definitely then going to look for a wave 3 to the downside or another 1, 2, and then a wave 3 to the downside. But you want extension, high amount of volume, 5 wave structures. In the bullish scenario, you have your W, preferably your wave X, of course, would be a bit longer in time because now your wave W is, your wave X is so short compared to your wave W, right? Would fit better with a multi 1-2 where you compare this move up to this move down, right? And even then it ended before the 382, by the way, right? But at least it's closer to the 382. So preferably in the bullish scenario, you continue the range for wave X at least a little bit longer before you move down in your wave Y. Nonetheless, sometimes X is very short, but what you want to see in Y is a 3 wave to the downside. So you need to see move down, move sideways / up, and a move down. And then move back up, take out this high, confirm a pretty much 3 wave structure, right? And that's the moment you look for price to move up, all right? In a bearish scenario, you do not get that, right? You look for continuation to the downside. It can be down if you get another 1, another 2, right? Right, and you don't want this high to be taken anymore. You look for market structure to remain bearish to the downside. So before switching to bullish at the moment locally, one needs a little bit of patience and a little bit more proof, right? And then we look at the news. We do have some news. I don't know why I have all the different countries on, so let me quickly clear that up and go to the US, click on save. So today we had some news. Tomorrow, right, on the 13th, Friday the 13th, by the way, we have some news as well, right, at 4 p.m. Central European time. Generally, this over here doesn't give a lot of volatility on the chart, right, news volatility, but nonetheless, good to know about. So at least trade safe, because of course it can increase the volatility on the chart, right? But generally not too much happens with that specific news item. And then we get to the probabilities. Right, so at the moment, I would still like the flat over the ABC zigzag. I I gotta say that number 1 and 2 are quite closely related at the moment. I could even give them a shared first place. It's just that it's about this move to the downside now, right? So I am mainly looking at this right now. That is what I am focused on. I'm focused on the 1 hour time frame, but I patiently wait for the 4 hour to clear things up and for the 1 hour to clear things up as well. The multi-1-2, which is your most bullish scenario on the 4 hour time frame, lowest probabilities by a mile. So the first two are the most important one, right? Which is the flat, where you need a 3-wave move down in X, right? Again, important, I highlighted this in detail, or the diagonal here, where you preferably have a multi-1-2 to the downside. So my dotted line is actually a little bit wrong. You would preferably look for a 1-2, 1-2, maybe another 1-2, who knows, but eventually move towards the downside. Also, if this becomes a flat, keep an eye on the 1.618 as explained, right? But if this becomes a flat, look for price to move down. Don't want to change the market structure later, right? So you need price to move towards the downside impulsively, right? So that is very, very important. It's about the local structure. So focus on the move down being a 3-wave structure or a 5-wave structure. 3-wave is what we want to see in X, 5-wave in a bearish scenario, right? If price creates a 5-wave down, we expect more lower prices to come. For a double zigzag, one of course preferably does not touch the 0.7 Fibonacci at 103.4K. And on the 1 hour time frame, if price took out the low, I wrote this before, by the way, this low was taken, so obviously now the low is taken. But if the low is taken, look for a double zigzag or a multi-1-2, which is what I covered in the video. I just updated the scenarios before recording, but forgot to update the little bit of text here. So the WXY or the multi-1-2, I explained in detail what to look for locally. Okay, so just be patient, because if bullish, right, the price will show you, right? Price action will tell you when probabilities for the bulls increase. We're now in the blue pocket here. If price touches 105.4, we're not looking for a flat anymore, potential flat in a bigger X or a bigger 2, okay? And if price moves to the downside and touches that 1.618, we look for the WXY, right? Or multi-1-2. For the WXY, you then need A, B, C, back up, okay? And even preferably, of course, move above that pivot, okay? If this still turns in a flat, right, then you still want A, B, C after, take out that high. Okay, so you got to be patient, right? You got to know what to look for and when probabilities really, whoops, a change in your favor, okay? Okay, and that is then the difference. Y is a 3-waver, right? And a wave 3 is a sharp move down on a higher amount of volume. So, that being said, I hope that this video was helpful or valuable to you. On the left, you see a video on the simplest way to use and trade Elliott Waves without even counting. And on the right is the Elliott Wave educational playlist to help you understand more about Elliott Waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye bye.